up YouTube? This is Mayank Sharma from Varchaswa Trading, and I hope you all had a very good trading day with our directions. And in this video, we'll discuss about what we discussed in the previous trading sessions video and what actually happened, and we'll also go and see our weekly outlook, that what had happened till now and what are we expecting to happen. This is not a daily review that will come tonight, but this video will help you understand how these levels were taken and how we traded these, so you will get better understanding and you will be able to make some money by trading independently. So without any further ado, let's get started. So what happened here? These were the levels we had marked, these were the levels I had talked about, and when whole world was bearish, we put in one video called our market is ready to make a bottom, now our market is ready for a up move. And when whole world was bearish, Varchaswa was the only community to put it out on internet, to put it out on a public platform confidently that at least one up move will be given by market. When everyone carried puts here, I personally carried some calls, and these are the results. If I show you, these are the, I made overnight more than 50% gains on my calls. And yeah, this is where I told you that if market opens, market will have to open with a gap up. I particularly specified this in the last video. Kindly go and check it. I told that market will have to gap up above this level, and this level will act like a major level. So people will think that okay, we have to sell this when this candle breaks below that. That is not how market works. That is an euphoric example which is taught to retailers, and it is an unfortunate truth that in markets most of the people will never make money due to improper knowledge and this bookish knowledge. Bookish knowledge looks good only in theory and backtesting. It doesn't hold water in live market. You will have to understand that. So when we get some bullish candles reactions here, some bullish reactions here like this is where you can start building positions and you will target these highs. In the last video itself, I told you that for major people, they will expect price to drop from here. They will expect price to drop from here, and a reaction will be given here. But this is not a major reaction. It did nothing specifically. So when people were selling here because they were seeing this resistance, we were adamant about our bullish positions. And somewhere along the night, somewhere along the day, we had taken a break of these levels and a very good momentum. This looks small, but if I show you from bottom, this was like 320 points move we captured overnight. That is 2% of your index, and that is not a small deal. So, and later in the day, when I saw some price action building around these areas, give me one moment, please. Yeah, and later in the day, when I saw some reactions around these areas, this is where I told everyone to book out their long position somewhere along here. I personally took some puts and some future shorts, which I always, and some stock options as well, futures too. And then we made money on this fall too. But for free community, we had put out that okay, now book your longs, and we saved them through this crash. So let me show you. This was the game. This was and this was how, this is me telling that to watch the video and see. At 145, I told whoever is long, kindly book here for once. Somewhere along 145, 145, somewhere along here. This is where I told people. This is where I told people to get out. This is the apex of the move. I told at the precise top, and after our message was floated, market fell down more than 300 points. And this is how we capitalized on that. This is where I have told saved you from crash again, and this is what we made on that fall. We anticipated the fall and we made this gain. So don't get impressed by the gains. This is a numbers game. Even if you had a small capital, you can capitalize on it. It doesn't matter the amount of money you make. It is relative to your capital. So don't get impressed by big numbers. Get impressed by the skills. Try to learn the skills. And if you want to learn how to catch such precise tops and bottoms, we do provide mentorships. The link will be in the description below. Kindly check it. Check our free Telegram channel. It will help you make money in live market. It will save you from these humongous moves, and you will be able to literally make money from that. And yeah, so this is how the markets have moved on our prediction. We got an up move, and I told that for people who know Elliott wave, this is why my view was bullish. This for people, this is my Elliott wave. For me, this is the fifth point of correction, and this is a irregular wave. The irregular wave, once corrected, gives a good move. But now let's see view for the, let's see, have a weekly outlook, and let's go and see what can happen and what has happened in the past. Okay, So now when everyone is panicking here, everyone is panicking here, we need to understand the price action. What does price show you? What does price show you? Let's go from here. Okay, this is a weekly analysis video. So let's see what had happened here. This is where price had given a breakout structure. For people who know, for people who do smart money, they know what a breakout structure is. For people who do retails, for them that is the breakout. So this I'll consider this for masses, I'll consider this a break. Okay, if you are on our channel, you know about something of a smart money. So this is our breakout structure. So this breakout structure is originated from here. This breakout structure is originated from somewhere along these lows, right? So if you see, markets are pretty over extended. Markets are pretty overextended. So for people who know about premium and discount prices, if we see, markets are still in heavy premiums, and at least till this point, they will be in a heavy premium. So the level of 13,000 becomes very important, and that is the exact same level we had given when markets were somewhere around here. This is where we on our Instagram had told that markets can come to 13,000, and we had caught this move from here. You can also check this in our free channel, we have taken this. So now let's understand. Now we got that out of it. Now let's see the price action building around here. Okay, we'll go through this even smart money perspective, or for majority people who don't understand smart money, we can also look at this through a retail perspective. I'll cover both. So brace yourselves before judging, before commenting. Just have a look at the full video and we are good to go. So okay, so we know that this is our equilibrium prices can come here, but if we understand the price action around this area, what do we have? We have a impulse, correction, impulse. Now for most people, they will consider this to be a corrective area, but for me this is nothing. For me this holds no water. For me this is just noise. My main in this leg is this. Okay, my main points are this. So for me the prices are like this. I personally won't even have a look at this. So what happened along here when prices started correcting, when a TV analyst gave a target of 20,000, I think, yeah, 20,000 here, that is when we have to be cautious. When everyone is buying, remember, smart money is selling. Okay, so okay, and these news media houses, these are just tools for market makers to manipulate you. So be cautious and never trade on news analysis or anything else. You have to understand what they are trading against you. So what had happened, this is where market broke their structure. Market came show some bearish intent. This is where market showed some bearish intent. When we had this, now this. Now if you see, market had started making lower highs. Here, lower highs, lower lows. So we can see that a downtrend has started. A short-term downtrend is established in the market. And I want to tell you guys something, that this correction looks big. This correction may seem big to people who started trading recently. This is approximately 15% correction, but a normal correction in the market can stay for 35 to 55% is normal correction for healthy markets. 35 to 55%. Even if we are to take 30% correction from the top, we still have these levels to be tested. If I show you 30%, this approximately comes from the same level we have told you. See, no matter what analysis you use, if you use the right tools, whether you do smart money, whether you do retail, you will be able to make some good money. Okay. Okay, so now we see what had happened here. Markets have started establishing a downtrend here. This low failed to break this high, then this low is taken out. So now we have a one leg of a bearish impulse. We have this, and this. This is where majority of the people see. We don't take breakdowns or breakouts, but it is important for you to know what is happening in the markets to gauge the direction of the market. This is where majority people went bullish again, and we were the only community to tell you to hold your horses and be on sell on rise. So why was this? Because market showed some bearish intent. They had to give a pullback. To this supply zone, and this is where the order flow was mitigated, and this is from where market had started melting. If you see on a monthly candle, this month will surprise you. See, this one will surprise you. This is one candle. If you see, this candle itself is somewhat of, if we see these two candles are 2350 points on Nifty. That's a pretty huge down move, right? But if we see in a general term, markets will not talk about this fall, but even if we see generally, have a look, markets tend to correct. and heavily. So this was the all-time high till this one. Markets corrected somewhere around 60%. 60% here. Whenever market made another all-time high, this corrected 25%. Okay, and this high, this corrected more than 40%. So if we take mean, if we take medium, so markets can normally retrace are somewhere around 30 to 50%. If we take 30%, this is our target. Okay, this is our target for the bearish side. It doesn't mean that you start selling tomorrow itself, because as I told you, we are not breakout traders. We are not breakout traders. There are only two traders in this world. First is a breakout trader, second is a reversal trader. Even if reversal trader is a normal retail trader, not smart money trader, he can still make money, but the probability of breakout traders to be profitable over long term is pretty meek. So breakout trading, I don't personally prefer it. If it is working for you, well and good, so continue with that. So if we see, these are the levels. Okay, these are the levels. So now let's try to understand where are the major level of demand. Even if we see, if we understand candlesticks, the momentum of the candlesticks, markets took time to go up, but when they started melting, they just melted quickly. Here market took, if we see, one, two, three, four candles to go up, and it took markets to one to cover half of that. So we have to understand the momentum. Now for most people, for more retailers and for smart money players, this is going to be their order block. That is why at Varchaswa we don't use dumb smart money order block. We don't use vanilla SMC, which most people use. We have our own interpretations, our own method. So this is an order block. This is an order block for dumb smart money, and people are expecting it to react here again. It may or it might not, but for me this is nothing. This is just noise. Okay. And for retailers, what is this? For retailers, this is a level of break and retest. So we have two type of dumb money here. One, retailers. Second, dumb smart money, dumb SMC, vanilla SMC rather, not dumb but vanilla SMC. So these are the people who are looking to buy here. But if we see, when did this move originate? This move actually originated, this huge up move originated from somewhere around here. If market makers, if market participants who bought here, they want to buy again, if they want to buy again, they will at least have to retrace along 50% of that, or else if they start buying here, their average will be way too screwed, which is not possible, right? They will not like to have a screwed average price, because their positions are not like us. They trade in huge quantities. So we have to understand all this too. Now if we gauge the momentum of these candles, if we gauge the momentum of these candles, it looks damn bearish, right? It looks damn bearish. Doesn't mean you start trading breakout or breakdown of this area. That is not what I'm saying. I am telling you to be on sell on rise. Okay, you have to understand. Now for most people, if I show you, for most retailers, what are they thinking? Now the smart retailers, the literally some experienced retailers, they will take this area as a resistance and support. They will still be able to make money, because the area somewhere along comes to 13,000. Markets can react off to here. See, markets may not always need to, this is the index of an country. Okay, this, we are talking about an index here. Markets doesn't always need to retrace back to the origin. Market doesn't always have to retrace back to origin over a short term. But if you see, market here reacted to the origin again, and this is the same up move. If we measure this up move, this was a move of 76%, and this was an up move of more than 140%. So markets can react after this origin also. So this is the monthly chart time frame. So we have to understand all these nuances before starting to look for bottom handling opportunities. So now let's have a look at Bank Nifty. Bank Nifty is somewhat of a more corrected market. Like if we see something like this, have a look. Again, same thing here. Bank Nifty, if we see the mean of Bank Nifty, mean reversion of Bank Nifty, markets, let's start from here. Okay, whenever markets made a all-time high, this market retraced more than, okay, 30% here. They retraced around 30% here. And if we see this is a 70% retracement. This was a 2008 bubble. That was so bad, like, for country and for most people. 40%. If we see, Bank Nifty tends to retrace along 30-40%. Bank Nifty historically has retraced 30-40%. So even if we take from this top, even if we have to measure from this top, markets could react to 30%. So if we take a mean of 30%, 30% still comes to the area of this. Okay, 30% still comes to this area, and this is pretty normal. This is pretty normal. So now let's see how retailers will be seeing this. Okay, now for retailers, this will be their support. Okay, for retailers, this will be their support zone. This area will be their support zone where they are willing to buy the market. One moment please. Okay, this is where they like to buy the market because for them price reacted once here, twice here, so they are expecting again a pullback. Not saying it cannot happen, but that is not high probable. We will not look to swing by somewhere along here, because if we know our view, I told you markets are in a downtrend, and in a downtrend the highs will remain, the lows will be taken out. So here also high is remaining, so logically this low should be taken out, right? So to buy here and that to swing is not something that is highly probable. That is not something you can do it and survive once, twice. You will be able to catch the bottom once or twice, but if you make this a habit, over a long run you will lose a lot of money, and I don't want that to happen personally to any of you. If we see, this is where the levels markets can come, and if we see on a realistic level, this is where market had given a breakout structure or a breakout, and market had reacted once to this. So when again the market comes here, there is a high chance markets go below this to what? If you see origin of the move, markets tend to react to the origin of the move. Market tends to react to the origin of the move. So market can easily come to these levels, and these are not unrealistic levels, because we have seen even 70% dip from the top, and this is just 50% dip. So I want you all to understand this and not get scared. This is normal. That is how market moves. If markets won't retrace, they won't be able to go up. Markets can never move up like this. So expect retracement. Whenever you get market along these value areas, you can increase your SIPs or invest in a good wealth portfolio, something like that. There is nothing really to be get scared of. Corrections are healthy, and even there is saying the longer the base or longer the correction, the healthier will be the up move. Okay, so if you have a correction like this, the up move will also be small, but if you have a healthy correction, then the up move will be very strong. So that is in long run a good thing. It will give you money making opportunities. Okay, so this is my this is my view over markets. Oh, this is a weekly outlook video, so have a look accordingly before commenting anything obnoxious. Try to understand my perspective, try to understand what I'm telling you, I'm trying to teach you, and you will be able to make a lot of money. See, positive people can find positive things everywhere, negative people will find negativity everywhere. So we have to focus on what is important, what brings us value, and just keep everything aside. Okay, so this is my view, this is my weekly view. And even if we see major stocks, like if I show you HDFC Bank and all the major stocks, why I am bearish? So because, okay, let me just get rid of this. So okay, so even if we see these major stocks of the country, they are all overextended. These are all overextended, and stocks can retrace to, yeah, stocks retrace 50%. If I show you Nifty IT index, give me one moment. CNX IT. If I show you Nifty IT, okay, this is the level it can react to. It is still in a premium array, and I hope that you people know what premium and discount areas are. If don't, I will make a video on that too. Nothing to worry about. But this is where market had broken out. Market retested this, and again. So this is the level. So prices can retrace to at least 50% of these legs. The 50% of any impulse is the equilibrium point where the buyers and sellers are equally powerful. So here the 50% is coming to this. The 50% is coming to this area. So all the major stocks or all the major indices are melting. If we see IT index, it had already corrected more than 25% from the top. If we see auto, okay, if we see auto, next auto, here also auto has given a bearish intent here. Now this high is protected, this low will be targeted. This is auto. So let us see some defensive sectors like pharma sector is also kind of making a rounding top. It looks also ready for a down move. So majority of all the sectors of your index of your country, index, okay, give me one moment. Let's see CNX FMCG. FMCG looks healthy, FMCG looks good. Whenever FMCG and pharma sectors are in uptrend, that means that people are cautious, they are getting into defensive sectors and they are getting out of aggressive sectors. Now let us look at bank nifty. Okay, sorry for that. So let us look at bank nifty. What happened here? Bank nifty also looks like topping out. So majority all of the heavyweights, like let me see Tata Motors and I'll show you. All of the heavyweights of the country, all of the heavyweights of the country looks to be plunged down, okay. So the stock is analysis is also very important to understand what is your index doing. Stocks hold a lot of importance. Let's have a look at Reliance also looks too overextended, and if we see where we had the last structure break, somewhere along these areas, if we mark the 50%, the 50% is coming to at least this area. So all the stocks, all the major stocks of your nation can retrace, giving further push to the downside. So I hope this video brought you some perspective, and there is nothing to be panic about. These corrections are good. We will get majority of wealth creation opportunities and will guide you through the same. Have a look at our Varchaswa Trading global community. This is our free telegram channel where we give such valuable education. So kindly join this. It is completely free. It will help you make money. The link will be in the description, and I'll see you in the next video. Have a very good night. Thank you for listening to me, and have a good day.